Hey guys, what's happening? Welcome to the video. Let's do a little trade review. Today, I traded the NASDAQ like usual, and very interesting moves this morning. We had a nice trading range type of day. So we'll take a look at the price action. You can see we were in a trading range for the majority part of the day. Highs of yesterday was on watch, but also it was this 5-minute uptrend that was intact going into the morning session. Look at the NASDAQ. We had this 5-minute higher low here, and we never actually lost that. So that's why bulls managed to remain in control. The bulls are still in control, but we're seeing a lot of profit taking near these highs here. Near the 245.80s, 245.70s, that level keeps getting rejected. There's a lot of sellers right there just waiting to absorb those buyers. And there was a lot of traps that were set. A few of them were here, and then later in the day, a nice bull spike into a failure. So there was a lot of really cool setups. We'll go over them slowly here. So I traded, I think I had 5 total trades. So 1, 2, 3, 4, 5. 3 of them were winners, 2 of them were losers, and these 2 losers, I ended the day slightly red, mainly due to commissions and the fact that I had to get out on market orders on a lot of these trades. So yeah, now a couple of notes for myself. A lot of the time I was trying to fill and take profits on some of these trades. The problem with it was I was looking for those patient fills on the offers to sell at, but I wouldn't get them, especially when I was trying to sell in this general area here, and we kept rejecting it and I couldn't get the fill I was looking for. I was long a call around here. I was looking to get out around the 70s, 71 or 72 I was looking for, and I was trying to be a little greedy with the fill and didn't get it, and I got hammered for that. Held on to it because I had a stop below. Actually, I almost got stopped out. No, I was 3 ticks below this low tick right here. That's where my stop was. So I didn't get stopped out, and then I managed to kind of get out here for right around a break even. But it's kind of annoying, right? So the moral of today's video is going to be the fact that I think I'm going to focus more on one-to-one risk to reward for a lot of these scalp style trades. So generally, I think I'm going to focus more on a one-to-one risk to reward. So for whatever I'm risking, I'm going to be taking profit at 1R, and then later on when I trade more size, I'm going to look to hold the rest of that, and if I get another 0.5R, then I'll take it, but for today, if I would have just been taking those 1Rs consistently, I would have ended up with a solid like 5R profit today, but ended up with a 1R loss. So it's kind of dumb, and a lot of it is just because of commissions and everything. That's pretty much it here. When I'm trading the NASDAQ, I'm reading the tape here. I've got the NASDAQ, the SPY, and the XLF, but I was really just watching the NASDAQ and looking at Apple, Microsoft, and Amazon, which were in uptrends, holding that 5-minute exponential moving average. On all of these, Amazon is kind of in this trading range, seeing a lot of these weird fake prints here. Anyhow, so generally we were strong today in the NASDAQ. That's why I was bullish. I was bearish and bullish because you can see that we're in a trading range. Let's take a look. Okay, so we're in a 5-minute uptrend going into the morning session, watching the higher lows here, 244.80, 244.70. We move up to test the highs initially. We have a move up and a failure. Actually, we had about 2 attempts to move up. Look at the 30-second chart right here off the open. We had a move up, a parabolic move up, and a failure, trading right back into 245.20s. I was looking to sell that. I sold that bear break, and we had a move lower here. I had profit, and I had to take my 1R right away because as we moved up, slowly profit went away. But the thing is that the price I got it for here was a good fill, because when we came back up, the contract didn't decay as much because volatility had increased in the market a little bit. So actually right back up here, I managed to still sell this put option for a profit, even if it was higher than where I bought it, which is kind of weird. So that's volatility right there. When the market moves very swiftly and then swiftly back up, volatility increases in the contract, and therefore the premium will increase a little bit. So that's just how it works. After that, we moved higher. The next trade was here. So you can see how we moved lower and then moved lower again, and a failure. So we had 2 attempts to break here. And on this attempt right here is when I started to get long this trade. And I believe it would have been something like this. We're looking at the 2-minute exponential moving average, and we held it there. I was looking for us to potentially hold it a second time. So that was generally what I was watching. Again, I like to switch between my time frames a lot, just to kind of get a feel for it. But my favorite are 2-minute, 5-minute, 1-minute from time to time. And I've been using the 30-second to really nail these failures. You can see how we moved up for a couple legs profit. And generally, look, I would have entered at 245.16 or so, and I would have been risking about 70 ticks there. So from 16 till about 50, I had profit. So I had 50 ticks of profit. I was risking about 70 ticks. But the thing is, it's also a high probability of profit. So probably I should have taken the profit as we moved near those highs. Now watch what happened. We had a bear break, no follow through. Boom. That's another long trade right there. So again, remember we had the pullback and failure, bull, and then another pullback and another failure. And again, that sets up a good bull right there. And you can see how this time we managed to actually break the highs of the day, okay? So I managed to have some profit on this trade. I had the 1R I was looking for, and I didn't actually take that 1R until here. When I saw that we had moved up here, support, breakout, failure, that's when I realized, okay, look, probably we're going to move back down into the range and I have to get out of this trade. So I got out for a somewhat of a bad fill there. Let's see. So that was a call. It was the 251 call. I got filled at 61 and I got out for 66 on this move right here where I was just telling you about. So I didn't get my 1R of profit, and I had profit on this thing all the way up to 75 or something, or 74. But again, the market makers were being a little greedy at those prices because we were seeing selling pressure coming in. So I had to lock in a 1R profit. I had a 1R here, I had a 1R here, even probably a 1.2R, and didn't lock it in. I ended up with a 0.6 of an R or something, or like a 0.5 of an R. So that's not what I'm looking for. Got to be more strict with that next time. Okay. So as we came back up, I actually shorted into this because I saw that the sellers weren't letting up here. So this was just going to be a scalp. So I sold right here and I got long a put, and it would have been somewhere around the middle part of this candle, not near the highs. I wasn't waiting for that patient fill, but when I saw that we came back up and rejected it a second time, I was looking to get short and see potential bear break. So as we got this bear break, I took about a 0.5 R on this contract, which was good. It was just a mini scalp. I wasn't looking for much on that one anyways. And let's just reference our 5-minute chart real quick. You can see that we're coming back to this 26 period, which has been holding once, twice, now a third time. So at this point right here, I'm looking to get long another time with a stop below the low of the day, right here on this failure. So once attempt to move lower and a failure. That was where I got long. We got a bit of profit, and then we had another attempt lower right here. This one was the second attempt lower and failure all the way, and we broke this low by about 6 ticks or so, and then we resulted in a bull. So right there, low risk entry on that failure, risking about 30 ticks, 35 ticks or so, and I got more than 30 ticks on this move right here. So again, I had to take that 1R. If I would have taken 1R there, 1R there, and 1R here, I would have been up 3 Rs. But instead, I'm up no Rs. So where did I trade after that? Let's see. Now again, we're moving back up into this area here, and I noticed that we were seeing a lot of resistance around this 70 area. They just, every time it would tick up to there, you'd get a massive rejection, and it happened multiple times. So look at the 1-minute chart. You can see once, twice, 3 times, and then it failed, and we got a nice failure right there. And I didn't manage to take profit on the trade on any of this, and that was my problem, because I was looking for an aggressive fill. Just really quickly, let me see. I was looking for a greedy fill. I'm just going to show you where I got filled on that call here. I got filled at 61 again, and I think I was looking for the fill at 71. I did not get that fill at 71. So yeah, that was a tricky one, you know, and probably I should have kept the break-even stop. After I was up 1R, I think it would have been a better choice to just put that break-even stop in and not worry about what the market was going to do. Because what I noticed, when the market chops against you, you lose a lot of vol in that contract. Because look, the reason I view option prices in volatility is because look, this option right here is a 1.92 vol, which means that over the life of this option, the underlying needs to move 1.92% for this option to at least break even. If the option moves more than that, then the option will likely result in a profit. If the underlying is chopping within a range, that's what kills this vol, because the vol of the option is predicting a 1.92 vol over the life of the option. But the more the underlying stays in a trading range, the less likely it gets that this option is going to actually move the vol that the options market is predicting. All right, enough gibberish. So you can see that we broke lower, and I had a stop at 48. It didn't stop me out on this. It came within 3 ticks of my stop. And this was a nice setup for a long. You can see again, we're coming down to the low of the day. We broke the low of the day by, I don't know, 14 ticks. And then we resulted back to a bull. And we came back up into the trading range here. All the way back up to 72. And now at 72, back to where the resistance was, I said, okay, is the seller still going to be there at 72? And he was still there. Look at the bull break. No follow through. And then we rolled over again. So actually right here, I took profit on that contract. Well, took a small loss on that contract because I realized that because the vol actually killed the contract. So I got long at 61 over here. Up here I was trying to get filled above 70, but really I had to just get filled at 70, maximum 71. I couldn't get that fill. Moved down to break the low of the day, and by the time it was up here again, it was having a hard time trading above 60. So there you go. That's the example of that decay I was talking about. All right, now right here I got short because again I was seeing the failure, and I didn't manage to take profit on the short I took. So we'll just show you that trade real quick here. This was the last trade of the day. It was, I got long this 239 put at 63, and I ended up selling it later for 57 for a tiny loss. But well, look what happened here. So I had a little bit of profit on this move right here, but not quite 1R. We had a huge bull that broke the highs all the way to 84, and I was watching very closely here because I knew that these sellers were not playing around here. And this right here was a bull. And as we faded, I said, you know what? Fade this breakout. Fade it, man, because these sellers are still here. That's a fake out, which you break out and then back into the trading range. That's exactly what I'm looking for to fade that thing. So fade it, and it came right back down, bounced a little, broke the lows. But the problem with this is I was long this put, and again, because of this whipsaw move, it lost a couple of dollars in premium, and it was having a hard time getting in profit there. And we're right near the VWAP. Now right here, this is what stopped me out. So you can see we had a move right down to the support, a bounce. Another attempt down to the support, a bounce. Another attempt, broke it by 3 ticks into a bounce. That one got me out. That one I said, okay, the hell with it. 2 failures after an attempt to break below support. I am cutting that. I'm not playing around. That's for me, that's a failure. So I'm out. You know what I'm saying? And what happened after was that failed to, the sellers continued to keep the resistance, and then we rolled over, and then a massive bull. So very choppy trading range price action. And that's going to be it, guys. So I'm going to definitely make the change to focus more on getting that 1R instead of always asking for a little bit more. All right, guys, that's going to be it for today. I wish you a fantastic day. Take care. Bye.